the election results.
Hello, everyone, and welcome to the second session of ICCIA Leadership Talks in Microfinance in Focus theme. My name is Pakinam El-Halabi, and I'm Media and Communication Associate at ICCIA. The first session in October was about the state of microfinance in COVID-19 and beyond. We got a wide vision regarding microfinance situation during COVID-19, especially in OIC countries. Now let us begin the second session with another look of scaling of microfinance, the enablers of impact, with our distinguished speakers to learn more from them. Let me introduce our honorable speakers. We have Ms. Nadine Chehade, Senior Financial Sector Specialist at CGAP World Bank Group. We have Mr. Amr Abulaz, Chairman and CEO of Tamwili Microfinance Company in Egypt. We have also Mr. Yasser Ashfaq, CEO of Pakistan Microfinance Investment Company, PMIC. And we're still waiting for Mr. Asad Mahmood, CEO and Managing Partner of Social Investment Managers. Maybe he have a technical issue and he will join us. So welcome and thank you for taking the time to join us today.
Thank you.
Thank you. Let us start with a brief introduction from you about your organizations and your contributions in the microfinance market. We can start with Ms. Nadine. Could you share with us a brief about the organization and the work regarding microfinance market?
Sure. First of all, thank you for having me. So my name is Nadine Chehade. I'm a Senior Financial Sector Specialist at CGAP. CGAP is a think tank. We're housed at the World Bank, and we focus on access to financial services for the low income. I represent CGAP across the Arab region. I've been doing that for the past few years and focus on a number of different topics. Lately has been mostly digital financial services. And with COVID, we came back to a little bit our roots and a big focus on microfinance.
Okay, thank you. Now moving to Mr. Amr. Could you give a brief introduction, please?
Thank you very much for the invitation. It's always a pleasure to be with colleagues that I'm familiar with, like Nadine, and also successful examples in the microfinance sector, like Mr. Yasser and the other colleagues. And I would like to thank the Islamic Chamber of Commerce and Industry and Agriculture for the past event, which was also quite good, and this event, which we are quite optimistic about, that it will be beneficial to most of the stakeholders in the sector, in the region, and your member countries. My name is Amr Abulaz. I am the Chairman and CEO of Tamwili Microfinance. I've been a founder and executive of two of the three largest microfinance companies in Egypt, namely Tanmeya, as a co-founder and CEO and vice chairman before I divested, and recently as the co-founder and CEO and chairman of Tamwili Microfinance. I've been working in the sector for the past 15 or so years, and I've witnessed a lot of evolution in Egypt and in the region regarding the sector. And I think this is one of the most exciting but also challenging times that the sector has faced. Like Nadine was saying, we were very much focused on fintech and digitalization for the past 2 years, but now we came back to digging deep and trying to solve issues related to sustainability, collection, proper extension of products that are suitable for the clients. So we're back to our roots again, as she correctly called it. And I'm glad that we'll be hearing each other's thoughts on the sector. And you talked about scalability and growth, which is actually one of the challenges in terms of tackling the approach regarding this important subject. Thank you again.
Thank you, Mr. Amr. Moving to Mr. Yasser Ashfaq. Could you give us a brief about the organization? Mr. Yasser, do you hear me? Mr. Mr. Yasser.
Yeah, hi.
Hello, Mr. Asad. I think Mr. Yasser.
Hi, Nadine.
Can you hear me?
It's not clear. The voice is not clear. So I'm not sure if there's a technical issue with the voice with Mr. Yasser. Oh. Mr. Yasser.
Is it better now?
Yes, you have the floor to give us a brief about your organization, please.
Okay. Yes, so PMIC is a wholesale lender to microfinance institutions and banks in Pakistan. And we are a company that is formed by 3 shareholders, DFID, KFW, and Pakistan Poverty Alleviation Fund. And we are an investment finance company, which is registered with Securities and Exchange Commission of Pakistan. A total portfolio of roughly 27 billion rupees, approximately $150 million dollars. We lend to 24 organizations, out of which 3 are microfinance banks. The kind of products that we provide are senior loans and also subordinate loans, but also we've now initiated our guarantee facility for accessing commercial funding, both from commercial banks and capital markets. In addition to that, we are also working on a number of other initiatives. One is certainly Social Impact Fund, which we plan to roll out in the next 3 to 6 months with a large mutual fund. That's for the future. So most of our funding, which is approximately more than 85%, goes to women and those institutions which are committed to serving women. 50% of our portfolio goes into rural areas. And in addition to providing funding, one of our roles is that of developing the sector, which means, developing products, developing new initiatives, supporting new organizations. So these are some of our major sort of, operational areas, and we can further elaborate as we move.
Okay, that's great. Thank you, Mr. Yasser. So let's move to Mr. Asad. Welcome on board, Mr. Asad. We have Mr. Asad, CEO and Managing Partner of Social Investment Managers and Advisors, SIMA. So could you please give us a brief introduction about your organizations and your role in the organization?
Sure. Thank you very much for the opportunity. Thanks everyone for joining today. So I am the founder of a small asset manager company, very fast growing. We started with about 2 people 3.5 years ago, and we are at 30 people now, and soon to have about 300 million under management. And we are sort of I would like to say, the next generation company in terms of how we are organized and how we conduct business. We are a completely transparent institution, not only externally, but internally, more importantly. We disclose our salaries to everybody. We have 360 reviews where I am evaluated, and my bonus is determined by the junior people in terms of my contribution to the company. We are a shareholder, employees at a certain stage start to own the company as well. We are, not only an investor, but have a long history of field building. The SMART campaign, client protection principles were written at Deutsche Bank when I was heading their microfinance at work. At that time, there was no impact investing. So we are an innovator and also pushing the envelope. We just got a license to form a fintech housing finance company in Pakistan that we are very eager to disrupt the markets there. And we are also were given the responsibility for the industry COVID relief fund for the off-grid solar industry. So we work in the off-grid solar, microfinance, housing, and education. And we are present in India, Pakistan, in the US, and in Kenya and Uganda.
That's great. Thank you, Mr. Asad. Now, let's start with Ms. Nadine. We want, from a global perspective and worldwide perspective, could you share with us your thoughts regarding how the microfinance evolved, especially after the digitalization trends that have raised after COVID-19?
Thank you. Yes, it is my pleasure to do that. And I'll start by sharing my screen for a hopefully short presentation that we have prepared. I take it you see my screen?
Yes.
Yes.
Yes, yes, perfect.
Great. So as you mentioned, I'm not going to speak a lot about COVID. I think we're all at this stage integrating the idea that it's not just one shock that is behind us, but that's something that's going to be part of our lives for the near future, at least. And what we have seen within the microfinance sector is a lot of digitization to answer COVID, on top of what Ahmed was mentioning about obviously rescheduling the portfolios, focusing more on collections, etc. But I'm going to focus my presentation on this digitization trend that was already here, has accelerated during COVID, and actually leaves microfinance today at a crossroads. So as I mentioned, that's me. This is CGAP's theory of change. And so our objective is what you have at the top here, which is to improve poor people's well-being. And I would just like to focus on two elements. And this is why financial services matter to us. And this is where microfinance plays a role. On the one hand, you have resilience, that poor people who do not actually have a regular flow of income, do not have a salary at the end of the month. And so they're actually able to manage their liquidity a little bit better, be more resilient in front of shocks. And on the other hand, they actually have this opportunity to seize whatever economic opportunity comes their way. So this is really what we've been focused on. And so that's really important because, when we look at it from that angle and we ask why microfinance? I mean, I've been personally for the past couple of years leading a study on fintech, focused on the Arab world, but I mean, following the trend that's been global around the hype of fintech. And so the question is, why microfinance? Well, considering those two elements, microfinance institutions still matter. And we have seen over the past 3 decades that they have consistently delivered, on the one hand, suitable financial services to the sort of segments we care about, the low income. They have done so in an affordable and responsible way. And I, was also in the industry when the SMART campaign was launched. And that responsibility is really something that is the distinction of the microfinance sector we know. And they've done that in a sustainable manner, as opposed to a number of other programs that we have seen in my region, notably governmental-led programs. And so as a result of that, we've seen a lot of funding coming in. So here you see that, until 2018, it has reached $47 billion of funding. But I was looking at, my earlier notes, and we're speaking starting 2007 at something around 10 or 11 billion dollars. So we're speaking a 4 to 5 times increase in about 10 years, which is not negligible and proves that those microfinance institutions, the majority of whom receive the financial inclusion sort of funding that you see on this chart, have actually offered a real value proposition. The one issue with microfinance institutions is that they have done a very good job at this impact, but they've been a little bit less successful when it comes to scale. So if you take a look at the landscape of about 10,000 microfinance institutions that are available globally, most of them serve less than 100,000 borrowers. You have a little bit less than 600 that serve above 100,000, but below 1 million. You only have 62 of them who serve 1 million borrowers. So obviously this is linked to the size of the countries. But this actually, from a business model perspective, this lack of scale has led to what we call suboptimal outcomes, because most of the microfinance institutions have just one product, maybe two. It's quite standard. This is what made it easy to replicate, but it's not very diverse. They're not very resilient per se, and we're seeing with the COVID, a number of them, we were fearing a liquidity shock at the beginning, but more and more we're seeing a potential solvency issue for a number of them moving forward, and mostly it's high cost, and that's still something that we've not been able to crack. So when you take a look at the average cost for those very large MFIs, it's actually 60% lower than that of the other MFIs. And so if you also take a look at their profit margins, and I'm sure Amr can testify of that, the profit margins of those smaller MFIs are actually 2 to 3 times lower than the larger ones. And so scale is what we're actually looking for. So when the digital challengers, the payments companies, the fintechs emerged, practically a decade ago, but mostly for the past, I'd say, 3 to 5 years, we all thought why not them? But we actually found out that they're actually chasing sometimes other segments. They're very focused on high tech, but they also have very hungry investors. And so that part, the responsibility part, that is essential core of the microfinance world very often, is not often here. And when you take a look at digital credit in Africa, for instance, it really calls for caution. And the other thing is that in a number of cases, they have achieved scale, but they have not really reached the low income with the sort of products that are, again, aimed at supporting livelihoods. Not to say that they have not offered valuable services, but those two things that microfinance institutions offer were not necessarily here. So we're really thinking at this stage, how can the industry do both, scale and impact? And so on the one hand, you have those digital challengers with not too clear on impact. They have the technology, they have the scale, they've figured out their business model. You have the MFIs on the other that have the impact, but they're still low tech, not a lot of scale, and they're still struggling a little bit on their business model. And we see more and more platforms in the middle that are finding new ways to provide credit. That has been the bread and butter for a lot of microfinance institutions. They're finding ways to offer that to actually small, sometimes informal merchants. And as that trend moves forward, it remains a big one to crack. But if it gets cracked, then you start having the digital challengers that really enter the microfinance space. So where does that, leave microfinance? Obviously at a crossroads and where it meets digital. We tend to see digitization as an opportunity for the microfinance institutions. They do need to rethink the fundamentals of their business model, however, to remain competitive, to provide the way they have always done responsible services, and to continue serving their core segment, the low income. And so they can either incorporate technology by building their own capacities or partner with fintechs. For instance, if we're speaking about credit, a lot of them need actually this sort of partnership to underwrite data. And one word of caution often we think that digital is going to be a lot cheaper. It is not a lot cheaper. It does need its own investments, and those are high, and technology keeps on evolving. So it's just a different sort of model with obviously some efficiencies, but not to the extent that's going to dramatically change the cost structure of the microfinance institutions. And so we have identified 4 categories of change that will matter most for digitizing the microfinance sector. The first one is the channels. Like, we really need new ways to reach and interact with customers the way fintechs have done so. It could be face-to-face, and that's the challenge, which is to find the right balance between digital and physical, but agent networks are a great way to do that. Call centers, we tend to forget, phones are actually made to call, and digital doesn't necessarily mean that you never speak with a human. The other one is the use of data. I mean, really, that has become the central element of financial services. So moving away from the traditional microfinance model towards really leveraging, they have 3 decades of data. You can use them to do risk-based pricing, more effective credit management, etc. We mentioned product diversification. Microfinance institutions will need to broaden their services, and they can do it in-house or through third party, but make sure that they're maintaining the customer relationship. And the last piece that's going to support all of that is to have really flexible core IT systems. That means the infrastructure, but also means the skills to manage the IT part and the data management part. And so because of that, change will involve, more than just investing in technology. And we've identified another 4, but the conditions to put in place for an MFI to undertake a digital transformation. First of them, really go deeper into understanding the customer needs. I mentioned about, the replication, and that's been the success of microfinance, quite straightforward, easy to replicate across countries. But at this stage, we have seen that the successful MFIs that have been here for a long term have had a long-term vision and have evolved to match their clients' needs. A very clear strategy. It's not about just taking technology and putting it on the old business model. It's really about rethinking the change that is needed and move away from the inefficiencies of the old model. That requires 2 things on the human resources side. A very committed and focused management, and it's not a straightforward journey, right? You need to adapt a lot and change a lot, but keep focused on the long-term goal, and obviously strong digital skills for the team. And I mentioned not just the IT people, but people who work in risk management, people who work in treasury, etc. So it's a lot of hard work, but to our opinion, it's really worth the investment, because otherwise the future would look very different, either for the MFIs and, more importantly, even for the customers that they serve. So we mentioned, preparing microfinance to get into the digital age across those 4 elements. There's 2 other things that are really important. One of them is the funding ecosystem, and we have 2 investors here to show us how important that is. Each type of investors really play a unique role. So we think we need to in time, I've shown how the investments have grown, but we've also tended to see 3 categories of stakeholders involved in the funding converge toward a little bit the same thing. We really need to go back to the roots with microfinance investment vehicles pushing for resilience through their commercial investments, DFIs pushing the frontier, and donors just taking the risks where no one else is. And the last part, we've often seen MFIs start as NGOs. Regulation has followed sometimes in some countries. There really need to be more adapted regulation in a proactive manner and not reactive this time. And here, the multilateral organizations play quite a large role. So let me stop here, and happy to continue the conversation with my fellow panelists. Thank you.
Thank you so much, Ms. Nadine, for the global vision about the digitalization and the need of digitalization regarding the microfinance, especially in this period. So let's move to Mr. Yasser. Could you share with us the strategy of PMIC to overcome the challenges that faced microfinance, especially after COVID-19? You are muting.
Thank you. The immediate response was that of, for everyone, it was a big surprise. We've never faced such a huge kind of event in our lives, or maybe, in the near past. So based on that, the first instinct was to, care for your own staff, for the people working in your team. So what we did was initially to, invoke our business continuity plan and start working from home without without, disrupting our overall operations. So some of people, especially those who were, required to go to the banks for the transactions, especially where the checks and all that stuff was required. They were only coming and the rest were working from home. But with that, it was important to start interacting with the microfinance sector, not only our borrowers, but also other stakeholders. For example, commercial banks, because as a large wholesale lender, a number of commercial banks rely on us for the information, as they don't have, physical interaction or presence in the field. So based on that, we started gathering information and in order to, form our own strategy. So it was interaction with the borrowers, with the regulators, with the associate body, with the Association of Microfinance Players, with the development agencies. And within, I think, 4 weeks, we were able to form a kind of initial, if I can share a slide, do I have that option?
Yes, sure, please.
Can everyone see this slide?
Yes, we can.
So I think the first step we did was to assess the capacity and the capability of the microfinance players to manage their liquidity position. Because in order for them to keep on operating, keep their staff in place, I think the first thing was not to look at the portfolio at risk positions or the loss that they might incur, but to look at the liquidity position. And based on that, I think in April, what we did was to restructure the portfolio of more than 90% of our borrowers. And the intention was not only to provide them liquidity, but to also give them sufficient space to provide deferments to their own borrowers and stop sort of, pursuing them for repayments. In certain cases where we felt that the borrowers would require, and these were very few, deferments for the markup, that was also offered. And, so by April mid, this was done. Then we constantly engaged with the microfinance players, regulators, and in restructuring their portfolios, helping them out in providing them information. And then based on that, both the regulators provided a number of regulatory took a number of regulatory steps which provided relief to the institutions and then the ultimate borrowers as well. Constant engagement with the commercial banks and other agencies. It was very important that not only PMIC as a wholesaler provides deferment to the institutions for them to have sufficient space, sufficient liquidity, but also for commercial banks to consider that. And based on regular interaction, at times in the initial couple of months or 3 months, I remember we used to provide a monthly update to the commercial banks and to our own to other stakeholders as well. This also resulted in inclusion of microfinance institutions. There's a distinction between microfinance institutions and bank microfinance institutions, as some would know, cannot raise deposits. So and they are regulated by Securities and Exchange Commission of Pakistan. Unlike MFBs, the microfinance banks are regulated by State Bank of Pakistan. So we pursued SECP and State Bank to provide the facility that the government was offering for the payroll. So there was a payroll loan provided by the government to industries and small and medium enterprises. But initially it was not offered to non-bank microfinance institutions. Since they were not able to raise deposits, we pursued SECP and State Bank, and ultimately this was also agreed, and these institutions are now availing that facility. In addition to that, we had constant interaction with the government departments because a lot of policy making and incentives were being offered to various sectors. And this was a critical sort of, time, and therefore it was important that some kind of relief, which also resulted in some subsidized loans going to non-bank microfinance institutions and microfinance banks. Then this is our regular sort of operating, but even though we were working from home, the process of provision of NOCs for payroll, refinance, and other facilities that microfinance institutions were taking were processed in a very, very timely manner. Sharing of international best practices was also a critical part. We had monthly Zoom meeting with the whole sector. The experiences during Ebola virus of BRAC in Africa, we prepared a small note on that based on existing literature, and offered that as a best practice to be followed by. And that actually helped a lot of institutions in interacting with their customers. So these were some of the steps, but going forward, what we have observed is that with these steps in place and both the regulators playing very active part, most of the institutions are now in a much better position. They have sufficient liquidity. The portfolio at risk rates is not as high as was expected in, let's say, March or April. It's approximately currently around 6%. The deferred portfolio is around 11%. So the total, if you count portfolio at risk and deferred portfolio, it's around 17%. Another important step which has provided relief to the microfinance institutions and banks is the decline in interest rates of approximately 6.5% to 7% by the central bank. So if you consider 10 to 15%, and it is expected currently, there is some expectation that the portfolio default rates would be around somewhere, between 10 to 20%. So if you consider, 6 to 7% decline in interest rates, some of that loss could be covered as microfinance institutions have not reduced their lending rate. And then going forward, we still feel that the things are not over. The second wave, we feel that has, I would not say started, but it is cropping up. So we need to be very vigilant. We are working with the institutions as we did earlier, and we feel that they need to keep themselves sufficiently liquid in order to meet any challenge in the future. And we at our end are also negotiating lines of credit, not only with the commercial lenders, but also with development finance institutions and working on risk sharing mechanism with the international institutions in order to provide cushion or liquidity to microfinance institutions. So these were this was my reply to the answer, and if there is any question or query subsequently, I'll be happy to reply. Thank you.
Thank you so much, Mr. Yasser, for sharing with us the response of PMIC to COVID-19, and particularly the look regarding the Pakistani market of microfinance. So let's now move to the Egyptian market, and we have Mr. Amr Abul Azm. So Mr. Amr, as CEO and co-founder of more than very important company of microfinance in Egypt, let me ask you, from your perspective, what are the changes that are seen in the Egyptian microfinance market after COVID-19?
Okay, thank you very much again. And I think this is one of the most interesting panels I've been to since the start of the beautiful COVID-19. And I'm very happy to be with Nadine. Nadine is one of the visionaries in the sector internationally. I need your presentation. I need to cheat so many things out of it, you know. So I'm happy also to be with people like Mr. Asad, who has explained a different concept and from an investment point of view. And I'm always glad to hear about the Pakistani experience because it's very similar to the evolution of the Egyptian experience. And I'm very interested to have some one-to-one discussions with both Mr. Asad and Mr. Yasser about this. And I'm saying this in the outset because I found what's being said very exciting. Coming back to your question, let me tell you that this is not the first challenge we face in the Egyptian market. We've always faced challenges. Our challenges have been historical, and I think it has made us quite robust, and it has made us quite knowledgeable about the sort of challenges we faced. Challenges related to market conditions, clients, staffing, regulatory changes, and also a couple of revolutions. So the only thing which, I mean, pandemics and things of the sort are not really such an issue for us right now. But it has been quite challenging because, as Mr. Yasser said, we have been looking at the supply side and the demand side and how to deal with that in context of the Egyptian market. The difference between the challenges we're facing now with COVID-19 and, for example, the revolution in 2011, which have some commonalities with what we're seeing right now in terms of repayment patterns, portfolio at risk, magnified to levels that we've never seen before in the market, challenges related to sectors, is an international context. And I think this international context is affecting all of us here in Egypt as players. This has been quite beneficial because it's one of the very few times that it has brought all the players in the market together with one wavelength and one way of thinking. The Egyptian market, as you quite know, is diversified in terms of service providers. We have banks, we have companies, we have large MFIs and smaller MFIs. And I think that each of these institutions have their own way of impact and their own way of implementation. And I tend to agree. And I really, on a serious note, I enjoyed the presentation of Nadine very much because on one hand, it has touched upon so many things of what I've been seeing, and it has actually solidified the way I'm thinking about how the market is evolving right now, because we've been having this argument for such a long time whether to push with digitalization in such an aggressive manner, whether to support all the Tom, Dicks, and Harrys of fintechs all around us coming with new ideas, or to just take it a little bit slower and see what's beneficial for the market and what's beneficial for both service provider and for clients. I personally believe that fintechs, I'm an investor in a couple of fintechs. One is a peer-to-peer lending platform, and another one is a merchant financing and aggregating platform. And I think that through aligning with young, enthusiastic and energetic professionals, it has provided me with the conviction that if you find the right formula and the right product and the right intervention for microfinance or small and micro enterprise lending, then this is beneficial. But as Nadine has said it, not every intervention is suitable for the market. And I've been working for microfinance since I was working with KfW. Was actually, I started before that, but with KfW, I solidified my experience. And I found out that there is a myth related to microfinance that any microfinance activity will lead to poverty alleviation and income generation and the such. But the triple bottom line is not achieved all the time through availing the products that we see today. Some products hit directly through the triple or the double bottom line, but it depends on your size of institution, it depends on your type of product, it depends on the segment that you're dealing with, and also on the gender. And sometimes for us, people who have been working in the private sector, coming from a purely banking background, and also semi-developmental, we're not looking at it from the perspective of how much money we're going to be making. But the beauty of this industry is that you could be making money and also achieving income generation activities and growth of enterprises. Unfortunately, in Egypt, the sector is mostly dealing with existing enterprises, like many countries all around the world. Access to finance is abundant through the commercial banking sector. The regulator has been in constant discussions with us right after COVID. We have a healthy relationship with the regulator. The regulator has a healthy relationship with the central bank, and Nadine is smiling. And this is something that we see recently within the last 10 years, since we need the regulators in our business all the time. And they've been extremely supportive. Carrying on from what Mr. Yasser was saying concerning providing some facilities for customers and providing some incentives related to what's been happening to COVID-19, I think that the regulator at one instant has led some discussions with us in terms of identifying a set of tools or a set of solutions that will allow sustainability in the market, that will allow the clients to be accommodated when it came to the crisis we faced with COVID. Unfortunately, like most countries in Egypt, we faced issues related to closure, related to slow growth of subsectors, related to curfews, and this has hit the market very hard. But in my opinion, as someone who's worked in this market for a long time, I tend to believe that microfinance clients are more resilient, are more agile, and they tend to react to market conditions much faster than most people do in other sectors. Which takes us to the fact that how can we say that and then see results like 3 or 4 times portfolio at risk magnifying in markets around the world? I tend to believe that this is related to a behavioral pattern more than it is related to challenges or problems related to the industries or to the sectors themselves. We've seen that taking place in the market for a long time, and especially this is the first time in Egypt where we see that the regulator has issued official decrees advising the companies or providing the companies with clear instructions of doing or taking actions such as canceling early repayment fees, lowering charges, giving removing delayed penalty fees, as such. It's very innovative when it comes to providing facilities to the customers. The problem is that what we've witnessed, and this is actually improving a little bit nowadays, and we're crossing our fingers, because if we face another wave for COVID-19, I think that we will have to help the customers in one way or the other. And I think this is directly impacting our growth, or directly impacting our endeavors for introducing new products, our endeavors for digitalization. Although we've been working very diligently as a company, like other companies in the sector, in achieving some sort of a growth in the digitalization and branches lending, and also empowering our own staff with the tools that will allow them to, or will allow the company to issue loans on a much faster, or on a better scale. Nevertheless, I think that it has been challenging. I think the companies that were prudent and wise, like us, decided to slow down their growth, or to relook at the sectors that are witnessing challenges in growth, identifying the customers that really are facing problems through their sectors. It's a scientific and data mining technique that we used in order to see which sectors have been affected the most, in which branches. For example, a company like ourselves, with a portfolio exceeding £1 billion, providing credit to more than 80,000 clients in 14 different governorates, we have a proper core banking system. We have very smart employees at the branch level and at the head office, and we're trying to integrate these ideas into the working culture that we have. Because as a company, I think this is related to most industries or financial sector, that you need to align your departments, you need to align your staff in the same wavelength. And I think that we took a decision in April to look at provisions. I think that it's become a game of how much provisions you're taking. Prudent in taking the proper provisions, you're going to be successful. But if you are in the business of, whenever you see a client having problems, give him more money, creating over indebtedness and covering up your risk, and creating less provisions, becomes more of a Ponzi scheme or a self-defeating prophecy. And we know that this has happened in many markets all around the world. I believe that you need strong shareholders, you need responsible shareholders, you need responsible management that looks at the situation that we're facing right now in terms of how much control can I exert, how much transparency can I provide the institution to take the right decision. And I think that I have a lot of respect for companies and financial institutions who've been working with microfinance for the past period during COVID, that have actually exerted more control, taken the proper provisions, and dug in and decided to basically avoid the repercussions of the second wave, and look at this year as a year of challenges rather than look at it as a year of growth or creating business. I know that for most people with us today, including Mr. Asad, Mr. Yasser, and Nadine, this is textbook stuff that I'm saying. But unfortunately, what I've been witnessing in many markets, that the textbook stuff doesn't work. Some shareholders are still eager to see growth. Some shareholders are still eager not to see negative numbers coming out. And I think this is a big challenge. I'm very proud of the institution that I belong to, because this year, although we have provided our shareholders with more than 67% return on investment for the second year, and still, this is lower than what we expected in the business plan, but still, this has been provided with the proper provisioning structure. This has been provided through training our staff on different collection techniques. We believe that we have segmented the market and reached out to areas where we saw less challenges related to COVID, but more so, we have been actually very responsive to look at the portfolio in terms of not just the sector of growth, but also in terms of employees who can contribute further on the branch level and help their fellow staff, educate them on collection, on pursuing the clients. I have to say that, and this is part of the business, I have to say that we came to a stage also very recently where we have to hit, like all parties in the market, If we identify cases of fraud by the client, or if we identify cases where we have to pursue our funds legally, we have been quite aggressive when it comes to that. I am of the school of the carrot and the stick. I'm a nice guy all the way until you turn out to be not such a nice guy. Nadine بتبتسم بقى. Because I believe that at one stage, this is how you're going to pursue your money. This is an excellent business. It's very self-fulfilling. It's an economic empowerment tool. It's a financial empowerment tool. But then comes a stage where you find that you have to give a message in the market that this is the shareholders' money. This money is for sustainable growth, financial inclusion, and we have a responsibility to protect that. Finally, I'd just like to say something related to the crossroads we're facing. And a lot of the things that Nadine was talking about, I had written down before, and she managed to cover that on the macro level, so I will not dwell on that. I think that the challenge in the next period will be related to how much we are able to integrate the lower end of the market, because most of the fintech institutions I see that are aligning with big data houses are still looking at tier A and B and higher average loan size clients. And I think this is where the niche or a niche of smaller NGOs or MFIs will always find an area to deal with. Unfortunately, as Nadine said, their margins are very little. And when it comes to challenging times, these margins are extremely eroded. Their access of finance is minimal. A company like ourselves, we can borrow at 10-1, which is one of the highest in the world. We don't just borrow 10-1. We actually borrow in the entirety, maybe 100 times more than most of the NGOs can borrow, because we're a proper regulated financial institution with different corporate governance structure, with a higher minimum capital requirement. And that's why when you segment the market, you look at the banks and the large companies, they are usually dealing with higher average loan size. But I think that most of the people who are actually enjoying the time when it comes to COVID right now at most of the companies and financial institutions level are guys dealing with audit and risk, because these are the guys that have really a big responsibility, and executives, because it's most of the ideas all of us had before COVID in terms of we did actually develop a lot of products during that period, but they were mostly responsive to the needs of the market in order to shift our mindset into the changes that we're seeing in the market. But I think that beyond COVID, I think for a country like Egypt, I'm very optimistic that we're going into a full-fledged era of branchless lending, digital lending, relying on big data. We have a very young population. 65% of the population is below 30 years old. We have very strong regulators, CBE and FRA, and they're really promoting the market very well. They're allowing us to introduce new products on yearly basis. And with 110 million in the population, and Egypt still, as you know, is considered as a developing country with quite a low average income or GDP. I think microfinance is playing a great role in developing this country. Sorry for taking a long time, but I got too excited when I heard all these beautiful thoughts. Thank you.
Thank you so much, Mr. Amr. I think from your experience in the Egyptian market, especially the challenges, as you said, for example, a couple of revolutions in 10 years, we will have a good plan to overcome the challenge of COVID-19. And Ms. Nadine, we will definitely need your presentation, and maybe we share with the attendees too. I'm sure they're asking about it. So let's move now to Mr. Asad. To get a look on microfinance in different regions, as SEMA is already based in different regions, what are the main factors that it considered before investing in microfinance in a certain country?
Okay, thank you. And I look forward to engaging with you, Amer and Nadine and Yasser as well. Yasser is, our fellow countryman, so he's close to our heart. Done a great job with PMIC, and I think he'll continue to innovate with his equity ideas that he's thinking about. So look forward to working with you on those, Yasser. So I think one thing is for sure, that COVID has changed the world, and that it will continue to change the world. And digitalization, not only for microfinance, but for all businesses, is becoming crucial. Zoom, which we had used, and I should have invested in that stock a long time ago, it's become a household name. I think all of you in some way or the other are having Zoom meetings with your family. So I think there are very important changes that COVID is bringing about in terms of digitalization, which is really a trend that we are seeing in microfinance overall. In Pakistan, one of the largest microfinance institution called Thamir was bought by Ant Finance. Ant Finance just did the largest IPO in the world. And they are, looking to do that. And also payment systems and all that are making a substantial difference. I also work in the off-grid solar energy in Africa. And if it weren't for the digitalization, we wouldn't have off-grid solar, because making payments of 50 cents is very cost sort of prohibitive. I think the impact on microfinance on different regions has been really different. And in our portfolio, it has not been substantial. The first, when we heard about this, we thought this would be for a 6-month period or a 9-month period. But clearly with the resurgence, it's a longer term period. And our first effort was to provide relief. And we talked in terms of providing just an interest rate relief to our borrowers. And if you look at the microfinance industry, with 100 billion or more, if you calculate at 7% average interest rates, that's already a 7 billion capital. You couldn't create a fund of that stature. But if you did only a portion of it, you could have a big impact. We work towards that with CGAP and others, but the crisis never really sort of matured to that point. And then we also worked during the crisis in microfinance to harmonize within the investor community to provide quicker restructurings. And that was, I think, an important effort as an industry, because I feel that legally, we are spending too much money on things that don't really matter, especially in the off-grid solar sector. Companies are spending millions of dollars in legal fees and trying to secure small solar home system in remote areas, very dispersed, and they have no value. The value is to the lawyers. So I think we have to think innovatively. In microfinance, we have exposure in India, Kenya, Uganda, Senegal, Pakistan. And, we found that the sectors that had, there was a moratorium, but during even the moratorium, we were paid the interest. We didn't have to reschedule, but only for one small institution that we did for a short period of time. Because some of these, were in the agriculture sector or dairy sector, where essential services, so that didn't really impact the business as such. On the off-grid solar side, it actually improved the revenues, because people were looking to alternative form of energy. They didn't want to be locked in the house, so they would have energy or ability to run a TV or something like that. So there was a lot of that. I think our concern related to the COVID is really more about the effect on the economy broadly, which is slowdown. And I think that is, thank God that COVID has not really taken a big root in Africa, but also on the attitude of investors. I think investor attitude is clearly become more conservative. It is difficult to raise money. And I think that we had a fund that we were doing in Pakistan, which was exchange traded, rated fund in local currency, which we called the first Pakistan Microfinance Fund for Pakistanis by Pakistanis. It was done, it was rated A by an independent agency. We were working with the largest bank, but COVID came through and it sort of, everything stopped. Our investment committee became more conservative. Maybe I can talk a little bit about the relief fund that we are doing for the off-grid solar sector. This is about a $80 million fund. And I have to say, this is a historic fund in the sense that we are closing this fund in 3 months' time, which is, I've never done it in my life. And I mean, Nadine or others could testify that fund closing takes a year and a half, something like that, which is really going to provide liquidity support to microfinance institutes, to off-grid solar companies that are viable but having liquidity challenges. In terms of digitalization, if I can end with a couple of thoughts on that, I do have to go as we are running late. We have this idea of a fintech affordable mortgage company. We think, which we call Asan Ghar Finance. Asan means easy, Ghar means house, Asan Ghar Finance. I have been, you see my gray hair, it's not because of age, I just have not too much calcium, but I've been around the block, for more than 25 years in this sector. And I think that the mortgage finance business is the next revolution in terms of what microfinance did 25 years ago and what affordable mortgages is going to do. And I think that's an important sector that microfinance should look at. Is really pivotal, because in Pakistan, there are 200 million people plus, and we have only 60,000 mortgages. And those also in the more affluent parts of Pakistan. And the criterias are sort of ambiguous, and you have to bring 50% of the loan to value, and the value of the house is for foreclosure. So they already discount the value of your house by 30, 40%, and then you have to bring, sort of 50%. So they really, it's very conservative. Same in Kenya, 50 million people, 20,000 mortgages. So we feel what we are doing is really digitalizing that. And that has implication because we can create the systems in Pakistan, which is a high volume, low cost, very capable technical people, just like India. We have a lot of capabilities in our people. We just have a horrible reputation, which we have to deal with. So the idea is to, once we create a system, think about it, right? We have our system, our scores, our way how we lend, and we have our website and our app. I only have to not even move location of where they are on the servers. I just have to open them a market in an English-speaking country in Uganda, Kenya, in Ghana, and I can replicate. The regulatory issues are there. So I think that's very important. Digitalization is very important, Yasser, and we are working in Pakistan to start to look at a fund that would invest equity in some of these nonprofits, NGOs, or sort of the non-bank finance companies, to help them transform, digitalize, and we would put equity into the structure. So I think there is opportunity that we are seeing across the market, and I would leave it at that. I do have to have another meeting that I'm already late for, so I apologize, I can't stay much longer, but it's a pleasure, and any thoughts or questions, I'm happy to take it online. Nadine, it'll be good to see your presentation, and Amir, you have my email, I think. We're on the same email chain, and we look forward to interacting. Thank you.
Thank you.
Thank you so much, Mr. Asad, and thank you also for your time and information. So now we have a general question. So anyone could share with us his thoughts. It's about the planning projects. You are coming from different regions. If anyone would to share with us the investment plans and their company of their company and the regions they are planning to focus in 2021. We hope to be it's after COVID-19, but what are you planning for 2021?
From our side, it's quite straightforward because we don't do any investments. So,
yes, thank you, Ms. Nadine. Mr. Amr, could you share with us any plans regarding 2021 of Tamwili, for example?
No, I can't. It's top secret.
To get some secrets from you.
I think the challenge is that nobody can tell you what's going to happen in 2021 except trying to mitigate further risks. As has been said by one of the colleagues, I'm not sure if it was Yasser or Asad, that we thought that this was going to come and go in 6 months. I personally thought so too. I mean, with all these developments and technology and medical achievements, we thought that this was going to be another Ebola, or another SARS. But which is ironically not even as strong as SARS, but it's taking a toll on all of us. I think that most players in the sector are going to reimagine the scenario for 2021. I think that growth will always be the type of growth, the magnitude of growth in terms of quantity and quality, products, sectors, geographic outreach, and also the type of credit that's being provided is going to be reimagined. We already started this exercise, and I think that part of the value of this exercise in my book has always been to engage all the stakeholders on the company level, to engage the people on the ground. It's a bottom-up approach rather than a top-down approach when it comes to crisis. And I usually gauge the interest, gauge the ideas of people working in the field. The most valuable are your foot soldiers that are very well handpicked. These are the people who carry change. These are the people that we provide the training to, and they give us feedback on what's happening in the market in addition or in parallel to the data we get out of our core banking system, our reports, and our cohorts that we have by our analysts. I think that what we're seeing right now, again, is an evolution of thought when it comes to the market. You have, but also what's challenging is that you have no new entrants into the market that are not so familiar with the microfinance industry. This provides a dual challenge, a challenge to them and the challenge to us, because the challenge to them is that they are assuming a position in a market that they have not invested in before or have not worked in before, or sector, not a market. And it's a challenge to us because sometimes this can distort the market to a certain extent, especially in times of change. However, I think that the key element in the market in 2021, which is also related to proper risk management, is to always pursue financing clients with existing activities that are witnessing growth and scalability, trying to maintain your existing clients and your repeat clients to the maximum, because these are the ones that will help you lower your risk and also achieve better numbers of growth for the portfolio, but also incentivize your staff and keep the family spirit intact. The top 3 companies working in the market in Egypt have staff in excess of 1,200 members. And this is a huge number to manage, especially when you know that the model is an outreach sales model, employing between 70 to 80% of your company's employees on the field. And this is challenging, especially in times of pandemics. One of the things that we looked at right in the outset, and we're going to continue to do that in 2021, is to protect our staff and protect our clients. And unfortunately, on the field level, and I think this is everywhere, maybe also in Pakistan, most of the direct interacting agencies or the MFIs cannot work from home because the degree of digitalization is not so widespread that allows you to analyze and provide loans, or to do a proper algorithm that will grant the loan in a timely manner to the client without the physical interaction or without a certain degree of paperwork, at least for us from a regulatory point of view. So this will entail a certain physical interaction, but we believe that we have managed to provide our clients with the proper tools, including masks, the right level of cleanliness and disinfectants, etc. As for the clients, we have taken it upon ourselves through signing an insurance policy with one of the leading companies in Egypt to provide global healthcare for our employees on the field level. And also, which is, we were the only company that actually has done that, is to provide healthcare, God forbid, for clients who get COVID-19. And we have witnessed one case, and luckily this case has been treated well, and they're doing well right now. So this is part of our social responsibility that we assume with our clients, in addition to the set of decisions we take to alleviate pressure, financial pressure on our clients. This will continue. What I think will face challenges for all clients is the same degree of digitalization, or the same degree of product development and going into new markets that most of us as key players in the market have expected before COVID-19. That's on a macro level, I think, how most companies and how we are looking at it.
Yes, thank you so much, Mr. Ram. Mr. Yasser, would you like to add anything, or?
I think what we feel is we need to remain nimble, and any kind of short to medium term planning is something which is important in normal circumstances, but in this situation you have to plan maybe on a monthly basis based on the data that you gather from the field, and you need to, keep on surviving, and the institutions that we fund and the individuals, ultimate borrowers, the focus should be their survival, their business, survival of their businesses and their enterprises. And to do that, I think one needs to be sufficiently liquid and keep on having as much information as possible. Also, I feel that you at times need to take some extra risk. And for that, you need to convince your shareholders, you need to convince your boards and other stakeholders, because if you firmly believe in the impact of microfinance, I think this is the time to be a little more bold in order to help those who have contributed, even for those whose objective was to generate profits and to grow. I think now is the time to pay back to these individuals, the micro enterprise, the micro credit borrowers, and to take certain risks in order for them to, so their businesses would survive. So I feel that overall, this would be 2021 would be a year where I don't see much growth taking place. Those who would be able to survive and come out of this crisis without much, impact on their institution, or I think those would be the ones who would have sufficient opportunities or opportunity in the future to grow. I think the digitization part has also been tested in this pandemic. So those institutions who have, who were following machine-based lending, in my observation, they have not been able to cope with the situation very well. And touch is, I feel, always going to be important. And some additional, so I can quote, we cannot generalize, but there are a couple of institutions in Pakistan who have gone out of the way, gathered grants from corporates and supported their clients during this pandemic or areas where most of their clients were, and currently their repayment rates are close to 98, 99, and 100%, because they have shown to the clients that they are with them in their time of need, and the clients have responded as soon as the businesses opened. So I feel that digitization is critical for the operational part, let's say disbursements, repayments, operational activities of an organization in order to reduce the cost of delivery. But we still haven't reached that level of sophistication where we can design lending models and disperse money, especially in developing countries, to individuals. I mean, I was reading somewhere that C. elegans are a micro, a 1 millimeter organism, right, which has a very small brain, 300 neurons at the most. And humans have not been able to work out how their brain works. And humans have more than 100 billion neurons. So, you can well imagine how is it that possible to, even for computers, supercomputers, to work out a model where the reaction of human beings could be predicted. So it will take some time. I can't say that it would not happen ever. But digitization of the operations is something that should be the focus, but machine-based lending is, I don't feel that in the near future that, and pandemic has reinforced that. I know of an organization who was, the organization was almost 100% machine-based lending, nano credit, and their current portfolio at risk is in 90s. So again, I would say we cannot generalize that, but this is...
Yasser, you said that their portfolio at risk is in the 90s?
Yes, in 90s. Yeah.
Okay.
So
sorry to interrupt you, but
no, that's fine. So I'll stop here, and if there are any questions, happy to answer.
Thank you so much, Mr. Yasser. If no one has a question or something to add, I would like to thank you all for your time and your valuable information you shared with us. And let's be optimistic and we're praying to seeing you soon to learn from you how we already passed the challenge of COVID-19.
Thank you.
Thank you so much.
Thank you for having us.
Thank you.
It's a pleasure, and thank you for everybody. It was enlightening also.
Yeah. Thanks, everyone, and have a nice week ahead. Bye.
You too.
Yes, nice meeting you, Yasser, and seeing you again.
Same here.
Bye.
Take care. Bye.
Thank you so much. Bye.